Consumer inflation in Ghana accelerated to 29.8% annually in June from 27.6% in May. That's official data showed on Wednesday. This shattered another record while the West African nation continues to talk to the International Monetary Fund, that's the IMF, for support. Joining me to unpack the economic implications of this is Matt Kinniger, Practice Lead, Sub-Saharan Africa Frontier View. Good afternoon, Mark. Good to see you.
Hi, good afternoon. Good to see you as well.
Now, so why have economic conditions deteriorated so rapidly in Ghana?
Yes, certainly. So starting with inflation, as you mentioned, so inflation has reached, by some calculations, a 19-year high, so around about 30% by the last reading, according to the last reading in June. And this is far above the relatively low inflation rates that the country was enjoying during the pandemic, actually. So inflation rates of below 10%, which was very conducive to consumer sentiment, at least in the economy. Now, the economy has seen inflation rise significantly for a number of reasons. One is that the CD, the currency, has been under considerable pressure over the last couple of months. The currency has lost about 33% of its value against the dollar since the beginning of the year. This has been driven by, firstly, a series of credit rating downgrades by sovereign credit rating agencies over the last couple of months. This has resulted in an outflow of capital from the market. But we've also seen the country's trade balance deteriorate as the cost of imported commodities such as fuel, oil, and agriculture commodities has increased significantly. So the trade balance has weakened very significantly, and this has driven down the currency. So a number of reasons there. We've also seen the government's public finances also deteriorate. We are now expecting quite significant government spending cuts over the next 12 months or so. And this is really because government revenues have undershot expectations. By some estimations, they were around about 25% below what the government was expecting at the beginning of this year during the first quarter. So a number of factors coming together to make the outlook for Ghana look slightly less optimistic.
Well, I know the Ghanaian government did say they were not going to turn to the IMF or, international financial institutions for help. But what does the IMF deal mean for the country's growth outlook now that they've made a turnaround or a backtrack?
Yes, for sure. Yeah. So I think that this reflects the fact that the government doesn't really have much of a choice in the short term, at least. It really needs the support that an IMF deal will provide. So what we are seeing is the government facing the reality of its fiscal position. And therefore, it's relatively positive, because what it does suggest is that the government is actually taking its fiscal challenges, its fiscal problems quite seriously, and it's confronting these issues, and it's willing to proceed with some of the painful measures that an IMF deal would be associated with in terms of in order to stabilize public finances. So we could actually see a bit of a stabilization of the currency as a result. So we could see an improvement in investor sentiment, at least in the short term, because if they see that the government is turning to the IMF, there will be less risk of a very severe adjustment to public finances. We were expecting to see the government cut spending anyway this year, but with an IMF deal, it will be a much softer landing for the economy, and it will be a much more easily managed process for the Ghanaian economy. So certainly, we don't expect Ghana to be out of the clear anytime soon, but certainly an IMF deal would soften the impact of the current fiscal problems and inflation that the country is seeing.
Oh, did you know that Ghanaians took up placards recently, asking for a change in the economy and in government? But which sectors of the economy are still performing well, regardless of what they're going through, the woes they're going through right now?
Certainly. So it's always worth remembering that the economy is still going to grow this year. We're still forecasting growth despite the economic challenges. So we're forecasting growth of about 3% this year. This is a downward revision from our previous forecasts, but it still is growth. And there are sectors of the economy that are still doing relatively well, actually. So the IT and telecoms industry, a real champion of growth in Ghana. It's very well developed. It's growing very rapidly. It's quite well positioned to support the economy at the moment. We're also seeing investments into manufacturing, for example, automotive assembly, the education and the healthcare industries are also outperforming headline growth. And this is partly because of a very deep slump that they endured during COVID, but also because the government is prioritizing expenditure on healthcare and education, especially healthcare infrastructure investment, so hospital construction, for example. So despite weak public finances, despite weaker economic growth, there certainly are industries that will continue to generate opportunities for companies and will continue to support the economy over the next year or so.
Thanks, Matt Kinniger, Practice Lead Sub-Saharan Africa Frontier View, for sharing your insights on the program.
Thanks, my pleasure.